Hey friends, it's Ryan Brown, and today we're going to break down what has been going on in the news with the government raising rates. Everybody's all up in arms. Well, let's break it down and take a look at it and see what this means for you. Before we get into rates, we really got to understand how are they calculated. So let's just think logically about it. Rates are adjusted based on risk. So the higher the risk loan, the higher the rate, or the higher the points are going to be on that loan, because they're going to have to adjust this for risk. So what happened is on conventional loans, the government, Fannie Mae and Freddie Mac, they have what's called LLPAs, loan level price adjustments, meaning that they adjust your points higher based on the risk. So what I want to do is I want to show you what these look like. I don't want to get into the weeds, but I want to show you what they look like and kind of correlate that to what is going on in the news and to really break down what is happening here. Are rates going up for higher credit score borrowers? And are they going down for lower credit score borrowers? So let's take a look. So first out, this is LOPA Grid by Fannie Mae. This is for a purchase loan. And this basically just shows you at the top your loan to value. And on the left-hand side, it shows your credit score. So obviously, if you have a higher credit score and you're putting less money down, the rate's going to be higher. So the best way to think about this grid is, if we talk about a rate, let's just take a rate of 6.5%, just for example purposes. And let's just say you have a 780 credit score and you're doing 25% down, a 75% loan. There's going to be 0 points on that 6.5 rate. Now, if you decided, you know what, let me do 15% down, you're going to have to pay 3/8 in points. Going back to this example, if we go down and say you have a 639 score, for the same 75% financing, you're now paying 2 1/8 in points. So some people have been saying if you have a lower credit score, your rate and points are going to be lower than if you have a higher credit score, and that's just not true. That's fake news. What they did is they just lowered the amount of points for lower credit score borrowers, and they raised the amount of points for higher credit score borrowers. So yes, there is some difference, but it's not as stark as what people are thinking. So if you go through the grids here, like a lot of these credit scores down here with the lower credit scores, like sub 680 credit scores, these points are now lower than where they used to be. Your mid credit scores, like your 700s at 80% financing, these are now higher than where they used to be. But that's basically it. And it's been baked into these rate sheets now for over 60 days with most lenders. So there's really not a big difference at this point. There has been some pushback where people are trying to get this repealed. I doubt it's going to happen, but that's how these grids work. You know, it's funny. Sometimes you would get a client that comes in and they say, listen, I have a 680 credit score. I want to do 20% down. And let's look right now, you'd be at 1.75 points. And they're like, why isn't my rate or why isn't my points lower? Well, it's because of these grids. So one of the things that we do as a lender is that we have some unique tools that allow us to analyze your credit score. And with a few tweaks, if we can get your score up, now that's going to save you a lot of money. So if you're working with a lender, or when you're working with a lender, make sure they analyze your credit score to see if you can get their score up. I mean, just look at this. On a 20% down loan, a difference between a 719 score, that's 1.375 points, and a 780 score is 0.375. That's 1% different. I mean, on a $700,000 loan, that's $7,000 extra closing cost you would have to pay. If you're working with a good lender, they'll do an analysis to say, hey, how can we get your score to a 780? And they can do what's called a rapid rescore to get you up there. Now, there's a bunch of other loan level price adjustments as well. That's why you'll see through these grids, like if it's an investment property, boom, you're paying more points. Second homes, boom, paying more points. Look at these grids. It's look how the investment property and second homes are almost the same. Actually, they're identical. It used to be second homes would be priced a lot better. Now they're priced the same as investment properties. Kind of interesting. Manufactured homes are priced higher, 2 to 4 unit properties. Now, if your debt to income ratio is over 40%, look at this. They're hitting you with points. So this is why you're seeing so many clients in the marketplace are paying points on loans. So this is why you're seeing nationwide, industry-wide, all lenders, most clients are paying points on loans because of these price adjustments. Now, listen, on FHA loans, there's very few price adjustments. So now we're starting to see FHA borrowers get better rates, better pricing, lower payments than conventional in certain circumstances. So make sure you talk to your lender about that. Listen, I hope this clears up some confusion with LLPAs and the rates going up. It's really not as crazy as what people are talking about. If you have any questions on this whatsoever, feel free to reach out. We'd love to chat with you. Thank you so much. God bless. Bye-bye.